Hi, and welcome to Hitting Home, and I'm Mike Montague, and I'm here with Arif Khan. And today I thought we'd talk about focus on the buy side of things, and it all comes down to money. And
Absolutely.
I think when people first approach this, the obvious thing is they know they're going to need that down payment. But there are a few hidden expenses there that need to be considered before you set out. And so I thought we could maybe break it down for everybody, just go through some of those costs, not to scare everybody away from the process, but just to prepare people. So if you're looking a year down the road at buying a home, you don't want to get, just right when you're ready to launch out of the gate and realize, I need money for this, that, and that. You want that time to prepare yourself so that when you are ready to roll, all your ducks are lined up. So
well, that was the interesting thing that we were having in conversation before the show, and we were wondering, I wonder how many people actually put off the transaction itself or taking that step into home ownership because quite simply they're not aware of what some of those costs may be, and so it may have seemed daunting. And so
or in the same light, they may think they're ready and they have that first visit with the bank or talk with a lender or a real estate agent, and psychologically they're ready to roll, but then they realize, okay, there's all this, and then they step away, and it may be a long time before they revisit it again.
Sure, I'd say a good 30% of my clients will at some point advise or sort of admit that, I had no idea that the transaction included this.
And I'm sure we could do a better job as realtors to prepare people for that up front. And so hopefully with what we do here today, for those who are tuned in.
Well, we've talked about on the show over the last, what did we were told, 21 episodes?
21 episodes I'm hearing that we've done.
Which just seems astounding.
Yeah. And we're still talking.
Call
our
the
ego's
majors.
Still in check, and somehow we're managing to do this.
But we've talked about being prepared. And we've talked about putting a good team around you, so having a lawyer who you know and trust and will explain the process with you, the home stager, if you're selling, an appraiser, a home inspector, a good broker, a good realtor, the number of different components, a number of good people who make up that team. And part of that preparedness as well is knowing what the numbers are that you can expect. So let's get into some of that.
Let's get into it. And I just made a list with you here earlier, and just to keep us on track, and we'll just systematically go down the list here. So
I think the idea, though, the framework is, it's funny, we keep talking about the list.
The list.
So you were a renter. You've been renting up until now.
Yes.
And there are some very real costs. It's not like you're going from 0 to 100. There are some very real costs, obviously, that happen in a rental scenario. Sometimes you're paying the rent.
Yes.
Some rents include the utilities, some rents include some of the utilities, and some rents are plus utilities.
Yes.
Theoretically, if you're renting as well, it's a wise idea. It's advisable to carry home renter's insurance, so content insurance.
Yes.
But your landlord typically will have insurance for the actual structure.
Yeah.
Property taxes are typically factored into your rents, but you're not paying the rents. So what we're really looking at is some of that shift, some of that change that you're.
But any expenses your landlord has, is, you're covering as a tenant.
So let's break it down separately.
We will. Yeah. And going from being the tenant to the owner, that transition, there's a lot of upfront costs there, and that's the hurdle for everybody. Once you've passed through that, ideally your month-to-month costs are going to be on par with what you were likely paying as a renter, because again, paying rent, someone's paying a mortgage on that building you're renting. Someone's paying the upkeep on that. So you were already covering all those costs. You just weren't reaping the benefit and reward financially from that. Somebody else was. So
let's look at the transaction for starters.
Yes. Well, the transaction begins, one of the biggest things everybody focuses on, and some people don't look beyond it. I think that's all there is that down payment that you need to pull together to buy your home. And that's when you need to start saving and figure out where that money's going to come from, because it could be as little as 5% you're putting down on an average price home or any price home. The more you put down, obviously, the better terms you might get for your mortgage, as you could tell us as a mortgage broker. And quite likely the lower rates.
Actually, it's interesting because if the funny you should say that, the less money that you put down. So if you're in 5 or 10% territory, typically you're in an insured deal.
Yes.
The lender
under 20, is it 20 or 25%?
Under 20%.
CMHC kicks in.
In a traditional transaction, CMHC, Genworth, Canada Guarantee, those are the three in Canada. They're insuring the deal. Now you're paying a premium
for that insurance,
which typically offsets the discounted rate that you're getting, but the lender will typically offer you a slightly better rate because there's an insurer who's backstopping the transaction.
Exactly. Yeah.
Yeah. So when you
their
put
risk is lower. Hypothetically.
The risk is lower, definitely. Yeah. So now something to bear in mind though with that transaction, just a quick reminder to reviewers, there's a very good chance your lender is going to want to see the history on where that down payment came from. And it's okay if it's a gift. Sometimes the lenders will let you take a gift from a parent or a direct family member. But regardless of where that money is coming from for the down payment, they're going to want to see.
They want to see, and the government wants to know too.
It's honestly, it's for FinTrack, it's for anti-money laundering.
Suddenly you have $30,000 cash that you didn't have, the week before.
Yeah.
They're going to.
So what else?
Know if you have a trailer in the desert and running your own business there. Property appraisal. Not every incidence of a home purchase are you going to have the home appraised yourself, but the lender certainly is going to do an appraisal, and that cost is passed on to you.
Absolutely. So typically speaking, again, if your transaction is insured by one of the mortgage default insurers, it's quite regular that the insurer will do their own what's called a desktop appraisal, or if it's an actual on-site appraisal, they'll pay for the appraisal themselves if it's approved.
And
if not, you're looking at approximately $450, including HST, for a standard or an average appraisal.
Okay, that's a chunk.
Yeah.
Home inspection
and you're paying that up front.
Yes.
Yeah, you're paying that up front.
Home inspection fees. You don't have to do a home inspection on a home. I advise it to every client, even in a brand new home. There could be scenarios there, things wrong with the home that you just want to be sure. In the best case scenario, you're going to come away with a to-do list and kind of a how-to guide for managing your home. You may, in the worst case, come away thinking there's just too many things wrong with this house I don't even want to try and negotiate the price down. I just don't want anything to do with this. And a lot of things can be hidden behind. We did shows talking to home inspectors. There's a lot of hidden things. I was a building contractor for a number of years. I was cocky when I started in this business, thinking, I know as much or more than the home inspector. And then you find out there's a lot of things that just don't meet the eye when you take a quick walk through.
Do your favor, get a good home inspector. Yeah. Do yourself a favor. Now, we had Andy Christie from Safe Homes Canada on the show, and he made it very clear to us. 99% of the things that you're going to find in a home inspection are not reasons not to buy the house. As you said, there's an awareness. Just be prepared of what you're looking at. As long as structurally it's not falling apart.
Yeah. And if there are costs that are significant and aren't justified in the price of the house, then that's when you go back and you renegotiate.
Okay. So you're looking at about $400 or so. Let's do one more and then we got to go to a break.
Okay. Property survey. Now, again, not each and every time are you going to have a survey done. You want to find out if there's an existing survey for the property and how up to date it is. Does it show the existing buildings and that? But one of the primary reasons you may want to have a survey done is if you're considering maybe a severance of part of the land, if there's some discrepancy as to who owns a certain portion of the land, you want to build a fence, you want to know if you're going to be encroaching on your neighbor's property, or maybe you want to know if the fence that's there encroaches onto your property. There's a number of scenarios where you just want to know what your property line is, and in which case you want to know your setbacks from the street. So you want to know how much property the municipality owns. Are there any right-of-ways? There's a number of different things.
So for the more informed viewer, absolutely, somebody who's gone through this transaction before, some people may be saying, well, property surveys aren't all that common anymore, and that's true. Title insurance, which has been around for a couple of decades now, is pretty much going to be on absolutely every single transaction, and it somewhat puts to rest that requirement for a property survey, because you're paying an insurance where it says 99.9% of the time there is no problem. But you raise some great points about if you want to do some adjustments to the home, if you want to expand the garage, or if you want to put in a fence line or something.
Title insurance won't
title insurance doesn't help you
Change
for that. It
yeah.
helps you if there's an actual breach.
Yeah.
So we do have to go to break.
Yes.
But we'll pick up on that. Maybe we'll talk about title insurance when we come back from
a little
the break.
bit about title insurance. We'll move on. We'll talk about legal fees and related expenses as one of the next things.
Absolutely. So we'll be right back after the break. And welcome back to Hitting Home with Mike and Arif. He's Mike, I'm Arif. We're talking about transaction costs of a home purchase.
Yes.
And we got into a number of things off the top, and we actually did some quick calculations on the break. And I think it'll be quite interesting. We talked about the need for an appraisal. We talked about mortgage default insurance. We talked about a property survey. We were going to get into legal fees, but what we actually didn't talk about on the if you have mortgage default insurance, we talked about the fact that you might benefit from a slightly better rate.
Yes.
But you are going to pay a premium for that mortgage default insurance, and it could be in the range of 3 to 4% of the actual mortgage amount that you've purchased.
The outstanding, yeah.
Now, you're going to spread that out over the life of your mortgage. So if you're on a 20-year amortization, you're going to spread the cost of that 3 to 4% over the 20-year amortization.
25-year.
What you will pay up front is the PST portion of that, though. So you might imagine about $800, $900, $1,000 in taxes that you will be paying on closing to cover the provincial. The government wants theirs up front.
Yep. Oh, of course.
All right. So in addition to that, though, what else are we going to talk about? We should talk about the fact that typically there's going to be a land transfer tax involved.
Yes.
Right. So land transfer tax is a percentage again, and it's tiered. So you do want to speak to your lawyer about how to calculate land transfer taxes.
Certain percentage for the first 150,000.
Correct.
And a different percentage for the next. Yeah,
you can certainly go on a search engine. You can calculate how it's done in Ontario.
Online that you can find to do.
But the average home price,
and not just for Ontario. Like, keep in mind, there's provincial land transfer tax. Some municipalities, or at least Toronto anyways,
has a double.
Has their own municipal land transfer tax.
Yeah.
Now, something I can say, being involved with the political action committee for the Ontario Association of Realtors, we lobbied hard against the province not to extend that. The privilege to municipalities to put that land transfer tax anywhere and everywhere around Ontario, and we were successful in keeping that.
Yeah.
So
Toronto
that's
is a
saving
unique
people a lot of money. Well, they have a lot of infrastructure costs that go beyond what per person even that go beyond what smaller municipalities have. Right? Subway systems, airports, and everything else. They can make a good argument for it. At least they.
I'd like somebody to make a checklist of all of that, though.
Okay.
And I think it'd be interesting
to
find
we all
out.
have our costs.
But the bottom line is the average home price. You were saying right now the average home price in Barrie and surrounding area, Simcoe County, is about $450,000.
Yes.
So I called the trusted clerk.
You did.
And
Moneypenny.
And Moneypenny, and she calculated that on a $450,000 purchase, your land transfer tax would be $5,475. Now, that'll be payable on the completion of the transaction.
Yes.
However, if you're a first-time home buyer, you may be or you would be eligible for a rebate of up to $2,000 per person. So if you're a couple purchasing the home, of that $5,400, $5,500, you may be looking at getting a rebate of exactly.
And so we looked at legal fees. Do we look at in any
we
detail?
Didn't. We did not yet. We should.
Your lawyer's going to have a cost. Now, what they're going to do, they're going to make sure all the ducks are lined up. Transfer of title on closing day, make sure the money exchanges hands. They're going to do a title search, make sure that there's no liens and encumbrances on that property so that when you do take possession of it, it's free and clear. You want to know all these things. And for those services, and oftentimes there's other little things that come up. I just recently went through a sale where when the people came to take possession, they realized all the window coverings that were in the offer were not there. There was a little bit of a disagreement as to what was supposed to happen. Nonetheless, it came back to the lawyers talking to each other to settle those things.
Yeah, a lawyer's got a couple of jobs in there. A lawyer's job is to ensure that the parties involved are who they say they are, so that they legally have the right to be selling that property and you to be buying that property. Like you said, that there are no liens or encumbrances, construction liens, that there may be no heritage-related issues with the property.
There's a lot of things.
That the lender and that you can get clean title to the property is really what they're doing. But their other job is to ensure that the instructions of the lender are followed. So really, there are two transactions really in there. There's the transfer of title from the seller to the buyer, and then there's the registration of the mortgage on title as well.
Yes.
And that's the lawyer's job, is to make sure that everybody's represented. You may also be looking at independent legal representation if it's required.
Yes.
A spousal consent. If only one of you is going on title, you may be required to have an independent legal advice or representation for the second
And
party.
your fees, typically, at least within our region, Simcoe County, Barrie, you're looking at anywhere from $1,300 to $2,500 on average for your legal expenses, your fee to your lawyer. And keep in mind as well, there's any of these services that you're paying for, you are going to be paying GST on those as well. You don't pay GST on the purchase of a home, on the home itself, but for
Unless
services,
it's a new purchase.
unless it's a new purchase, but you will be paying it on those services and on the fees that they charge. Do you want to lead us into the next one here?
Sure. So, well, mortgage default insurance we already really touched on. There is a premium there, but the next one is title insurance. So title insurance is something that's come up over the last couple of decades. It used to be optional. It's now pretty much a standard. And there are two different types of title insurance. There's the lender's policy, and then there's the homeowner's add-on policy that you can purchase, and I don't know what the ratio is of people who subscribe to it. But typically speaking, the title insurance is there to protect the lender.
Yes.
So that in the event that we talked about a fence was built, you know, if you're looking at building a fence and have you got the property survey, basically the way it's been explained to me is the lawyers are saying, if we were to charge people, the buyer, an a la carte rate for everything that we had to do, that is now currently covered by title insurance, your legal fees for a transaction would be significantly higher.
Yes.
You'd have to go to the land titles office and search the history of the property manually. You'd have to go out and measure the property, et cetera. Now all these sorts of things are covered under title insurance because it's a game of odds. So if your front porch is on your neighbor's front lawn, or if the driveway extends onto their property, title insurance will cover to purchase that element from the neighbor or make any reparations.
And these scenarios you mentioned and many of the others are more common in older rural property or even older urban lots than they are in new subdivision lots where they're pretty cut and dried, those cookie cutter lots, everything's been figured out. So let's move on quick. Do we have time for another one?
Yeah, we have time for one more, absolutely.
Insurance costs for high ratio mortgage we touched on. Now there's three players who basically provide those insurance. Primarily it's been for many years, it's CMHC, Canadian Mortgage and Housing Corporation. There's Genworth, and what's the third one that you mentioned?
Guarantee.
Canada Guarantee. And what this basically is, and I'll let you could probably explain it better than I can.
Really what it is it's designed for, under the Bank Act basically, it used to be that unless you had 20% down, you weren't getting a mortgage, and the government wanted to make home ownership.
Which was easier when homes were under $100,000.
Absolutely.
Yeah.
But the federal government decided, you know what, we need to make home ownership more accessible, but we can't expect the banks to take on the risk of being upside down if the transaction doesn't go well. So basically the whole idea of home mortgage default insurance was to really take the burden or the risk away from the lender and allow them to open up their product offering to purchasers who have less than 20%. We could do an entire show on how mortgage default insurance has changed over the years, because it has changed significantly. You're not buying $1 million home with mortgage default insurance anymore. It's expected if you're buying in that price point that you've got your 20% down.
And another thing, if I might throw in, if we look back to 2007 when everything was going sideways or down the stairs, down the toilet. Can I say that on TV?
I don't know. Probably
in the United States, things were going south fast. And I think like a lot of people were losing their homes, defaulting on their mortgages and that. Title insurance was, home ownership insurance was not a requirement for people in the States.
No, and you really can't compare the States to Canada at all.
No, and that's part of why we were caught up with the same economic strains and stresses, but our real estate industry managed to come through that in a lot better shape. And it's primarily because of insured mortgages and having to, insure anything under 20% down on a mortgage. So put us in a better position.
So we've got to go to a break. And we got some interesting things that we're going to talk about when we come back. But if you were to sum up all of this stuff, and for the viewers at home, remember, if you're, some of these things are optional. The property survey is going to be optional, but there are some good reasons why you may want to do it. If you're putting 20% down, then the mortgage default insurance and the PST along with that's going to be optional. So we can't give you a specific total, but if you were to use everything in here, including the land transfer tax, we've calculated that you're around $10,000 for the transaction because the land transfer tax alone was $5,400. So if you're a second-time buyer, or if you're not a first-time buyer, you're going to pay the full land transfer tax. So you could be looking at anywhere between $5,000 and $10,000 in additional closing costs.
In addition to your down payment.
In addition to your down payment. So it's really important, as far as we're concerned, that you go into this, as you said, eyes wide open.
Yes.
And when we come back, we're going to talk about some things that are sort of, now you're a homeowner. Here are some things that you may want to be anticipating. So we'll be right back.
Thank you. Hi, and welcome back to Hitting Home with Mike and Arif. And for the first two segments of the show, we kind of summarized some of your upfront costs going into purchasing a house. I think with this last segment, let's just talk about, okay, so now you are a homeowner.
Congratulations.
You've crossed that bridge into home ownership, and now we're looking forward. There are ongoing costs, and maybe we can touch on some of those. What things people will have to look forward to now that they're a homeowner.
Absolutely. I mean, and I think we talked on the point. Make no mistake about it. As a tenant, you certainly are paying down the costs on behalf of the landlord.
Yes.
And that big difference really is, one, it's coming up with that down payment that we talked about, and the transactional costs.
And it's a bigger hurdle than traditionally it's been.
Yeah. So once you have the down payment and the transactional cost out of the way, it has been argued quite successfully that the cost of carrying a rental is almost the same as carrying your own home.
Well,
except for the incidentals.
There is a mortgage being covered. There are costs that need to be covered by a landlord.
Yeah.
The renter is paying those.
Yeah. One of the big ones is property taxes.
Yes, exactly.
So, typically speaking, you have to imagine that if it's worth it being a landlord, somewhere in there, the landlord's also factoring in that you're covering some of the property taxes, if not all of them.
Whatever their costs are, they're expecting that they're going to get that back.
But you, the homeowner, are now conscientiously paying your property taxes.
Yeah, and it's your cost. And there's the general costs, maintenance, upkeep, and improvements with the house, which if we can break down some of those, what they might be.
So obviously, I mean, great question, Mike. First and foremost, with regard to property taxes, you can be looking at about 1% of the purchase price. Again, it depends on your assessment, et cetera, and how that works. But imagine on the average home price of $450,000, imagine you're paying approximately $4,500. Just be prepared for that in a roundabout way in your budget.
You break it down month to month. It's an easier way to look at it.
Well, okay, absolutely. Look at about $400 a month in property taxes. In terms of maintenance and upkeep, remember this, as a tenant as well, yes, certainly you pick up the phone and you call your landlord and you let them know that something's not working right. Now you as a homeowner, you want to be budgeting. And it's not something, I guess if there's one great piece of advice that we offer our clients, or hopefully they consider it a great piece of advice, is don't wait until the furnace breaks to have to find money to replace the furnace.
And
so
you want to
put
find
some money away.
With a furnace, if it's 20 years old, even if it is functioning, it might be in your best interest to replace it with a higher efficiency unit. And there's rebates you can get from the government on some of those green purchases that you make.
Well, our lenders,
they're well worth taking advantage of.
Our lenders want us to budget about 10% for maintenance. So imagine if you're having your roof replaced, maybe your roof is towards the end of its life cycle.
Every 15 to 20 years.
You could be looking at $7,000 to $10,000 to replace your roof. For Windows. A furnace, you might be looking at $4,000. Again, and it depends on the size of the home. These are averages. Windows, absolutely. Now, windows, hopefully you're going to get 20 years out of your windows, but they could be $30,000.
And that's something to look at as a purchaser going in. If they're older wood frame windows that are going to need replacing in the short term, factor that in your.
Well, now, funny you should bring that up, though. That's something that obviously, when you're in the home purchase phase and you're going around looking at homes with your realtor, that is something that you should be taking into consideration. Is possibly part of the benefit of a home inspection is, where is this particular home in terms of its life cycle? what is
what
the
are my
age of
costs in
the
the next 5 years going
what
to
is
be
the
in
age of
this
the
home?
HVAC system? What is the age
Yeah.
of the roof? What is the age of this?
And what I like to tell people too is you may pay a little more for that home where they've replaced the roof, where they've updated the windows and the furnace and everything, but you're going to spread that cost over the life of your mortgage. Whereas you buy the home where all those things are needed, you're paying out of pocket for those in the
So
first
you had
few
a
years.
great idea though, Mike, and you said, you know, people have baby showers all the time, right? When they're welcoming a new member to the family.
Yeah.
Housewarming.
Housewarming party, sure.
Housewarming parties,
I
and
think
it
it's a
doesn't have
great
to be
idea. I'm
blenders.
glad you recalled that. And why not invite anybody and everybody you know over to welcome you into your new home?
Yeah, I mean, because if you've got grass, you're going to be buying a lawnmower. If you've got a driveway, you're going to be buying a snowblower that you might not have had when you were a renter, if you were in a multi-unit res, for example. But we've got to wrap up the show. Hopefully, you found it useful. Hopefully, you found it informative. Again, our goal is eyes wide open for you. Our goal is to make sure that you have a good team and that you're going into things prepared, that you're not caught off guard. Some final
Don't be
thoughts,
scared,
though,
because
Mike?
there's some. Sorry, I just want to say there is an upside, and that's exactly where you were going. You've got equity coming back that
Absolutely.
you don't have as a renter. Your landlord
Has the equity.
as your landlord, but that money you're putting out every month for rent, it's gone as soon as you write that check or transfer those funds over. When you're writing it towards your mortgage, that's money that down the road is going to come back for you and your family, and it's going to appreciate.
You
over
called it a
time.
forced savings plan.
Yeah, it's a forced savings plan.
There
of
are
sorts.
people who honestly say, at my stage in life, I live a lifestyle where I'm commuting or I like to travel a lot and I just don't want to own a home, and that's perfect for that person. For you, home ownership is not your thing, and we're thrilled for that.
Yeah.
We want to thank you for joining us again on the show today, and look forward to next great and exciting topic. But we wanted to make sure that you were going into your home ownership transaction well informed. So best wishes to you.
Thank you.